Good morning, everyone. Welcome to our Tuesday morning trading session. The market's just opened up. 1 second here. I'm going to get to my monitor. All right, so we're looking at the NASDAQ here. For those of you new to the trading room, welcome. We've got the Hawk Scalper here on the top left, Falcon Swing Trader bottom right, Eagle Trend Trader down here on the bottom left, and then the Raptor, the bottom right. Let's take a look at this Geiger counter though. Oops, wrong tool. Let's take a look at this Geiger counter before it trails off of the screen. Look at that influx of orders just prior to the market open. The Geiger counter, of course, being a tape reader. We have a whole block of orders, huge buying and selling. It looks like it was fairly evenly balanced. People always asking, is there activity pre-market? Is it worth looking at the market before the open? Yeah, definitely. Almost every day there's a report that comes out about an hour before the market open that seems to spark the market a little bit. Okay, the NQ looking a little bit sideways here at the moment. Well, not so much sideways, pardon me, but retesting these highs. We did get a sell signal, speaking of pre-market, here on the Eagle. I think I said sell signal, I meant buy signal here on the Eagle, just a little bit before the open this morning. All right, we're going to give them a few minutes here to settle in. It is rather early, of course, only a couple minutes into the session. Interesting observation here from Andrew. Andrew writes, I've only started using the Raptor, Eric, as I could never really get to grips with it, but now that I've spent some time with it, I really quite like it. Took the crude oil long at 48.67 for 22 ticks, and then again at 48.95 for another 10 ticks. Valid entries. I hope you'll agree. Well, let's go take a look. So here's crude oil on the Raptor. You know, before we take a look at these signals, I think it's so true what Andrew says. You've got to spend some time with your tools, right? These tools, they work, but you have to get comfortable with them too. I suppose it's like any tool, you know, whether it's a bicycle or a table saw or, you know, whatever tool, a welder, whatever tool you happen to have, you have to get used to it. You have to gain confidence with it. You have to believe that you can do what that tool is designed to do, and the DTS software is no different. All right, so here we're looking at Andrew's trade. So the first one, he says he took at 867. That would be this cloud crossover signal. Yes, definitely, Andrew. Valid signal. Now, I think maybe what Andrew was looking at this was, maybe this was an early cloud crossover, because I believe this was his second signal here, 48.95. And depending on how you were examining this chart, you may have deemed this first one your cloud crossover, or you may have considered that your cloud crossover. Let's take a look at a cloud crossover signal so you can know what I'm talking about. This one here is kind of illustrates the same idea perhaps a little bit more clearly, and I hope that you can see this hash mark here. So when the cloud crosses over, so you see the clouds are starting to cross, the dual clouds on the Raptor. When they cross over, we always anticipate that the market's going to go into the cloud and then that the cloud is going to support the new crossover. It's actually going to push the market out. And when it does that, it produces a buy signal. So we had a buy signal print here, and you could have considered that a cloud crossover. Now, if you didn't consider that a cloud crossover, some people like to see the clouds actually start to trend in their new direction before they consider it a cloud crossover. Then this would be your cloud crossover signal. Both are valid. They're just a little bit different. Yes, did I say buy? Andrew says you mean a sell. Yes, I meant sell. Sorry. Let's take a look at another example. The NASDAQ makes some very nice cloud crossovers. Maybe we'll take a look at a NASDAQ signal. And I'll bring the crude oil back. See, this is practically a textbook cloud crossover. So the cloud is bearish, the market pushes through, the clouds are crossing. I would not necessarily consider this first signal because we haven't seen the market retreat into the cloud and have the clouds push them out. This, however, is your cloud crossover signal. That's a high probability signal right there. So here's crude oil again from this morning. And if we roll this over, kind of pretend it's going bar by bar. So you may look at this and you may say, yeah, okay, the clouds are crossing. And depending on when you consider the clouds to cross, we've got that little bit of a retrace. The market bounces out. You may have considered that your cloud crossover signal right there, which is, I think, what Andrew was doing. And then the market, nice little rally from there. But if you did not consider this your cloud crossover, you might be looking at the market now and saying, okay, the cloud's crossed, the market's come into the cloud, it emerged, here's my signal, and then there's your little bit of a rally. So both are valid. It just depends really how you choose to interpret the cloud crossover. If you're in doubt, like I say, go to a chart like the NASDAQ or perhaps, yeah, the NASDAQ's a good one. We follow the NASDAQ a fair amount. And you can see, just watch how the clouds cross. The market retreats into the cloud and then bounces out. Yeah, that's a good reason too, Andrew. And let me talk about Andrew's question here just really quick, or Andrew's comment, and then we're going to take a look. Paul's saying there's a 4-arrow consolidation in the NQ. All right, maybe we'll deal with that first. Yes, sir, there is too. 1, 2, 3. We've got 3 signals. We're waiting on our 4th. 1, 2, 3. So a possible 4-arrow consolidation. And Paul's asking, what do you think? Because it's near the double top. Yeah, I know. It's at this point, it's unclear whether this market's just going to end up moving sideways. But if we get that 4th arrow, you could try to buy a 3-arrow consolidation to be sure. One, two, three. If we get that 4th signal, it is one of our high probability signals, so we should buy it. Remember, we don't control our risk by, do we take the signal, don't we take the signal? If it's a high probability signal, we take it. So let's take a look here. This is a first micro-macro cross signal. It is a high probability signal. Now this one might make you a little edgy. Why? Well, we haven't seen a very good test of the extreme, have we? Excuse me, had a little bit of a coughing fit there. So we know before the market truly reverses, we need to see a test of the extreme. So when you're looking at this, you may say, yeah, okay, first micro-macro cross, but we haven't had a test of the extreme. What does that mean? Well, that means we may well see the market retrace all the way up here to the highs. So in that case, maybe when the trade looks less likely, I'll dial down the risk amount. I'll try to do it for perhaps 1% of my capital. And trade manager says, no, sorry, Eric, you can't do it at 1%. Okay, so then I need to decide, well, maybe I'll enter below the low. Maybe I'll look at a second push entry. And maybe I'll run my stop up there. I can risk 1% if I do it that way. Or, if I'm going to go in for the full 2%, I need to make this decision, okay, am I prepared to risk that amount? Right? The objective here is not to get tapped out early. If that means leaving your stop a little bit further away, then that means leaving your stop a little bit further away. Okay, so you look at this and you say, all right, that should be an ample stop. The market brings you in and then promptly begins reversing. Oops, sorry. Sorry. Okay, so the market brings you in. Hopefully, you hit your break even. It looks like we just kissed our profit target. We're going to assume we didn't get a fill. If you're not running a break-even trigger, now you're kind of on the hook for the trade, and let's just kind of play this out. Okay, so at this point, you're starting to think, oh, I'm on the wrong side of this trade scenario. Where can I roll my stops? Well, when the sellers showed up here and started pushing the market lower again, this would be your time to start rolling your stops down. Obviously, if it fails here, it's probably going to head higher still. Okay, so you can, I would probably leave my stop here. If you wanted to be more aggressive, you can bring your stop in even more, so you would have been stopped out. But notice the wider stop, we would still be in this trade. The point I was trying to make is that you take the signal based on the probability, and you manage your risk right here. Now, speaking of taking the signal, there is our signal. Can I risk it down there? Ooh, I can too. Now, why would I risk it way, way, way down here? Well, because the market itself is still undecided. It seems like it wants to go higher. This is a 4-arrow consolidation signal. And once again, I could take it above the high. I could look for a second push on the entry. There's a few things I could do to try to keep myself on the right side of this trade. All right, well, we wait for that one to play out. I'll deal with the rest of Andrew's question. Andrew was mentioning his crude oil trade. On his crude oil trade, he said that I think I interpreted it as a valid signal simply due to it being close to the open, so momentum would drive it. And there's a lot of logic behind that. Actually, I was speaking with one of the DTS owners a few days ago, and we were talking about the first Eagle signal. He really likes trading the Eagle tool, and what he's done, and I guess Ray Burke did a little bit of work on this end as well, was take the first Eagle signal so long as it was in sync with the band. And he was telling me how he's getting very good results doing that. And again, it's a momentum play, just like what Andrew was doing with crude oil. Because very early, or pardon me, in most cases, when the market opens, there will be that initial momentum. So it's very rare to see the market, tick down for a couple of bars only to reverse and head higher. There's usually going to be at least a little bit of follow through. And one of our other DTS owners actually did a similar thing with the Falcon, and I think what he was doing was just to get kind of a few dollars under his belt, kind of to set the tone for the day. He would take his first Falcon signal on the morning, and what he would do is he would literally be in and out for like 3 or 4 ticks. I don't think he even held on for 5 ticks. But it was just kind of, it gave him that confidence, right? To set the tone, get in, grab some money, get out. But he ran some very, very tight stops on that first trade as well. So, yeah, there's a lot to be said for a momentum play out of the open. But providing the conditions are right? You want to be in sync with your tools. Like if you're producing here the Raptor, doggone it. I'm trying to do too many things at once. Here the Eagle, with that pre-market signal, I think that's found its profit target now. It has. So there's that initial momentum out of the open. When did that bar print? Oh, that printed right on the open, actually. Yeah, so this signal bar developed a few seconds after the open this morning. And Andrew's saying we got a signal on the Raptor. Out of the open, I think, are you referring to? Oh, Andrew says I took 2 contracts on the NQ on the Raptor signal at 82.50 for 20 ticks. So up here, 48.82.5. Nice. Now with the Raptor, like the Eagle, you're going to get better signals off of the hard edge. It's not that the soft edge signals don't follow through, but eventually you're going to run out of steam. Right? You're going to get these soft edge signals, and then they're going to try to turn around and reverse on you. So your highest probability signals with the Raptor will be your cloud crossover signal. Let's see if I can find a double pullback. The double pullback, we're looking for the Raptor to go into the cloud and emerge with 2 signals. And normally what it does is it comes down and it bounces off the hard edge. Let's see if I can find you a good one here. Well, here's... No, that's not quite right. Really? Have we not had a double pullback for this long? Okay, well, oh, here we go. This is a pretty decent one. This is more or less what it looks like. It tends to spread out a little bit like this. So the market makes a move. It's usually a with trend type signal. It's a continuation signal. And then it retraces into the hard edge, comes out, produces signal number one. Now, the danger with signal number one is that it may end up failing and sending the market higher. When you get signal number two, you can usually take that with a little bit more confidence. So there's signal number two. This is a double pullback signal. And then from there, we got a little bit of a move lower. Here, coincidentally, was another quick little double pullback signal. Kind of side by each. Market making two moves into the cloud, into the band. There's move one, there's move two. Comes out on the second signal, and that's where we get that momentum. In a way, it's similar to the four arrow consolidation that we get on the hawk. In fact, I wouldn't be surprised when you're seeing these double pullback signals develop on the Raptor, that in fact you are getting a four arrow consolidation working on the hawk. All right, so you got your cloud crossover signal, you've got your double pullback signal, and last but not least, we've got our trend change or soft edge buy counter trend signal. Now, obviously, these develop at the end of a trend. Because they are counter trend, you need to be a little bit more careful with them. Before you can take a counter trend signal, you need to have a trend. And then you get this failure. Right, so you get that little bounce. Sometimes it will develop a little quicker. Sometimes it will just develop right down here. You get a quick little bounce, and then the market refuses to head any lower and starts heading higher. In this case, it was a little bigger. Then the market comes and prints a buy signal. Now your target is the hard edge. However, when this soft edge buy signal develops closer to the hard edge, it tends to have a little bit more follow through. So you took a little heat on it, but it did give you a fairly decent move for the most part. And then notice it's working a cloud crossover. So like most counter trend signals, you don't need to take them. You can use them as an early warning, so if you're already short, maybe get those stops in a little bit tighter. Maybe look at taking profit, setting a profit objective. And then we come back with a cloud crossover signal and get a little bit of follow through on that. So this here, right here, cloud crossover. I actually did a little video on the high probability signals for the Raptor. And I think I started with the soft edge buy and soft edge sell signals, the counter trend signal. And somebody made the comment to the effect of, is the best signal on the Raptor a counter trend signal? No. It just happened to be that I started with that signal. Yeah, Andrew says I'm not good at counter trend. It's, don't worry about that. The problem I think most traders have is that they try to trade counter trend too often. It's funny how our brains are wired. You know, we can see the counter trend easier, I think, than we can see the with trend trade. And maybe it's just human nature to try to buck the trend all the time, rather than to go with it. But each of our tools does have a counter trend signal to try to show us when the trend may be unwinding. And yes, it is very difficult sometimes to trade counter trend. Well, Andrew, you may have gotten the move of the day in crude oil because they're dead flat now. Here's crude oil on the hawk, and you can see it's drifting sideways, already getting into some yellow bars. Crude's been rallying, I think, for the last 4 or 5 sessions, so it might be due. I think a lot of people might be looking at crude kind of topping out short term. Yeah, Andrew says one of your traders did a good spreadsheet on the Raptor. I think that might have been Christian. He does a lot of work with the Raptor. And if, for those of you who aren't aware of this, there is a Facebook group for Raptor owners and DTS owners. It is a private group, so you do need to register for it. And if you don't have that information, you can contact Adam. Oh, it was Ricardo. Thanks for the correction, Andrew. Yeah, Ricardo, he's the guy who came up with the double band idea. Because the Raptor initially only had that single band, same as the Eagle, and he said, hey, I'm getting good results with a double band, because what he was looking for were hard edge bounces. And by running the one band, there were a lot of bounces that he didn't get. Now, Ricardo wasn't looking for any substantial move. He was scalping, or is scalping. I should speak of him in the past tense. He scalps a lot. So when he gets that signal, he goes in. He's content to get his 10 or 15 ticks or whatever he's after, and then look for the next signal. All right, Russell's got a good question here about the macro pullback signal. What kind of structure makes you feel better about a macro pullback signal, Russell asks. Well, you know, sometimes the macro pullback is almost, well, I don't want to say a leap of faith because it's not quite that severe. What I like to see is, this is almost textbook, this one here. So we've got the market breaking out, breaking higher, there's some obvious momentum, there's a little bit of a pullback. The micro line goes out of sync, that's what makes it a macro pullback signal. And I suppose structure, you know, if I had some, I'd feel really good about it if I had, well, I suppose I could use that little swing there. I know Russell's asking because we've got a macro pullback signal right here. And it is, again, it's a high probability signal. I suppose this setup is very similar to the one that we just looked at. The problem with the macro pullback, of course, is that the market is declining. What makes a macro pullback an attractive trade is it's essentially a flag. So in this case, it's essentially a bull flag, and we're looking for a breakout higher. Now, having recognized that it is a bull flag, it's perfectly acceptable to draw trend lines and try to enter on the other side of the trend line. Andrew's asking, are there more spreadsheets out there? I'm not sure. Adam would be the one to ask. He would know. All right, so if you're currently long on this macro pullback, and before we get into this trade, there is one thing about a macro pullback that you need to be aware of. Typically, you only get 2 or 3 macro pullbacks within a trend. When we start printing like 4 or 5 macro pullbacks, things start to get a little bit iffy. Not that the signal is less valid, it's just that a macro pullback only develops when the market is moving against the trend. It's a short-term pullback. So when you see macro pullback, macro pullback, macro pullback, you should start to get a little bit suspicious that maybe they're starting to run out of steam. Again, it doesn't mean that you won't necessarily take the signal, just that you need to be aware of what's going on. And if you suspect that, maybe this macro pullback is like the 3rd or 4th macro pullback, it's not to say you shouldn't take it, but maybe dial down the risk just in case it's topping. Sometimes the biggest challenge in making money trading is to keep your stop out of the way. See here, we're going to do an extreme example here. So we're going to enter here. I'm going to cover down here. So hopefully the market will tick up here and we'll be able to sim this trade. See, had I kept my stop tight, which a lot of traders struggle with, they think, okay, there's a little bit of support. Here's my macro pullback signal. Okay, I'll put my stop under the last swing. I'll put it right there. And right now you're sweating bullets because you're within a tick or two of your stop out. However, if you're using a constant risk on your trade, you've still got $300 on the table here. If you're really in doubt where to place your stop, 2 swings back is usually going to keep you out of trouble. So there's swing 1, there's swing 2. Whenever the market does these little bounces. So, oops, there's number 1, there's number 2. So if you keep back 2 swings, that's usually going to be enough to keep you out of trouble. Okay, so we're looking now for a little bit of buying momentum. I think this 48.90 area where we're topping or near the 48.90 area, that was last week's high, Friday's high. So if you find yourself in this trade, it's important not to panic. Nobody likes to lose money. Believe me, I don't like to lose money. But if you're in this trade, you have to be comfortable with the amount that you have at risk. Even if your stop is right here, if this is where you chose to put your stop, you have to be comfortable with this amount so that if you get stopped out, well, not only does it not damage your account, but you don't get all bent out of shape for losing that amount. I remember years ago, I learned this lesson where I took a rather dramatic loss one day. It was substantial, to say the least, and I was bent out of shape the whole rest of the week. I was, calling myself down. I was doing everything that everybody else does when you feel like you made a boneheaded mistake. But I took a look at the trade. I figured out what I did wrong on the trade. And I wish I could say I've never repeated that mistake, but I certainly never repeated that mistake to the same degree that I did that day. So in a small way, maybe I learned my lesson. All right, so if you had the tighter stop, you would have just been tagged. Let's see how the second level does if we place our stop down here. Say around 48.77. I think this is why it's so important that you can cap your risk also to an amount that you're comfortable with. I don't see anything else moving. Soybeans still kind of sideways. Crude oil just dead at the moment. I think it's important also not to get too tied up on the last few bars on your screen. I remember reading about Ed Sequoia, and if you don't know the name, Ed Sequoia is one of the legendary traders of our time. And what he does is he'll print out a chart, or I'm pretty sure he uses a monitor now, but at the time people were still trading off paper charts. He'll put a chart on the wall and he'll go stand on the other side of the room and he'll look back at the chart to get a better look at what the trend is. And then he'll take his trades accordingly. And if you think I run big stops, I got nothing on Ed Sequoia. But the man makes billions of dollars a year, so who am I to say he should run his stock tighter? All right, so the lack of buying would make me a little bit suspicious about the buyers at this point. We should have seen some buying support come through here. The sellers might be getting a little bit stronger here. Andrew's asking if you take a look at the Raptor. Yeah, so you see, we're going to be looking at the hard edge for some sort of support. 48.72 perhaps on the Eagle. Pardon me. Here we go. No, look at that. In a free fall. So I think what they ended up doing is filling our opening gap. There was a little bit of a gap, I think, down here. Oh, or maybe it's still below the open, or below this price. Nope, sorry. This is where the market opened. Right here, this was the low of the morning, so they ended up filling this gap. Seller's definitely looking a little bit stronger at the moment. And now, of course, we are producing a first micro-macro cross lower, but we're at the bottom end of this trading range. So it's the same problem as this, but in reverse. And I know some of you are looking at this and you're saying, oops, okay, well there I go, I finally got stopped out. This is unusual, that the market would move all that way without giving me at least an opportunity to adjust my stops a little.
Order canceled.
But I think it's partly, because we were seeing so many macro pullbacks. Had one there. There's number 2, 3, 4. Alright, so we're a little bit late waiting for some signals here on the Falcon. We should get a cloud crossover here in the Raptor. One other thing to remember is that you don't need to take every single signal. Even the high probability ones. I've mentioned this before, but I think it's a good idea to have a trade quota. I think if you set yourself a reasonably low quota as well, it's going to help keep you on the bright side of the market. Many of you will have heard the story. The fellow who came to me, I guess it's probably going on 3 years now. He came to me for coaching, and he wanted me to teach him to be a scalper, and he says, Eric, I want you to teach me how to take 100 trades a day. And I said, well, I can show you how to take 100 trades a day, but you will never make money trading 100 times a day. And I think he was, I read all these stories about the HFT traders, the high frequency traders, and he figured that was the only way to make some money. Get in, scalp for a tick or two, and then get out and get another trade and do this 100 times a day, and you'll be a gazillionaire. Well, it may work for the HFT traders, but for the average retail trader, I don't think it's quite as feasible. So he never came back. But if you set yourself a quota, say 2 or 3 or 4 trades a day, that affords you to be picky. You don't have to take every single signal. My best days, I think, were days where I took 3 or 4 trades. My worst days were days where I would trade 10 or 12 times a day. Because after that, it's just a numbers game. I'm going to pick on the hawk because we don't have any other signals going on. But let's say this first micro-macro cross. Early, out of the open, it's a solid signal. The market seems to be in an uptrend. There's a trade that you could maybe throw a little bit of weight behind. Maybe take an extra contract or two, whatever your risk allows, whatever your position sizing allows. Now we are definitely in a downtrend. I don't think there's any question about that. So we're going to look for an opportunity to short. Now we may have to sit here for a half an hour. Russell's asking about a 4-arrow consolidation. Well, yeah, we're working on one. We've got 1, 2. We're going to work on signal number 3 here in a moment. Unless you're counting this as your first signal that didn't trip, this one right here, then you'd be working on your 4th. But here's the problem, Russell. Where's the stop go? Right? Ideally, there's no structure here. I have no idea how high this market's going to retrace. Realistically, it could trace all the way back here to 48.82. Why do I say that? Well, when you're in doubt, if you check the crest on your macro line, that's probably a good place as any. So you could certainly short from here. Here we're going to sim it. We're going to, I think for me, I'm going to scalp out on target. But the market's come down a long way with very little structure. I haven't seen a real test of the extreme. This is, if you're looking to follow me in on a trade, folks, and remember how I just said you only need 2 or 3 or 4 trades a day? This is one that I might not put in that, even though it's a high probability trade, I wouldn't put it in that category that this is one of those real cherry trades. Why? Well, here, maybe the illustrate it the best. We've come down, clouds are crossing over. What do we expect when the cloud crosses over? That the market is going to retreat into the cloud and the cloud's going to bounce it back out. Well, the band right now is trading at 48.74. So I could certainly short here at 48.65, 66. And then I'd have to take 10 points against me before just to get back to break even. So, remember the context as well. You got to take a look at everything that's going on here. Now, as it retreats, as it gets up here and produces a macro pullback, okay, that could be a little bit more enticing. because we're going to see that macro pullback somewhere around 48.74. I don't mind taking a little heat on a trade, but I don't want to take a lot of heat. All right, you could adjust your 4-arrow consolidation a little bit. 48.66 is the entry. Still need to risk it up here somewhere.
Order pending.
There's going to be a little profit taking going on here. All right, so now we're into a macro pullback signal. This is getting a little bit more inviting.
Order pending.
Andrew's saying, if you look at the Raptor, you have a buy signal, so that conflicts with the Hawk. Well, I'm not printing a buy signal just yet, Andrew. Still working that cloud crossover, getting into that cloud, looking for the market now to bounce out of the cloud. I'm running, Andrew says your chart looks different here. I'll show you my settings in a second.
Order
Just going to adjust for this macro pullback.
Order pending.
Okay, now before we leave this, let's take a look at this macro pullback versus the other one. This macro pullback should give me at least a retest of this low before it reverses and heads higher, right? It should. This market is plodding along, though, very... Oh, now we're into yellow bars. 1, 2, 3. Well, I will take a macro pullback off of a yellow bar, so we'll leave this trade in play. All right, we'll adjust this again.
Order pending.
That's what it is. Andrew says, my chart's 24/7 on the Raptor. I was just going to say that. I'm running at my session template, and this is true for all my charts. I'm running at 24/5. So you go here to the data series, 24/5. The only difference between 24/5 and 24/7 is very early Sunday morning, you get a few hours of the Globex. but sometimes that's enough to make the chart look a little bit different. It's not that mine is more ripe than yours, but I'm more interested in just the weekly trading. I'm actually most interested in the day sessions, but I will include the 24-hour. Andrew says my chart still looks different. All right, I'm running 10 days of data, default 24/5, and an 8-tick mean Renko bar. Andrew says he had a buy signal at 48.69.5. Now that wouldn't have been a proper buy signal anyhow, even if it did print, because the soft edge buy signal has to have a retest first, right? You have to have, there's the trend, you need a retest, and then you can take a look at taking a soft edge buy signal. So even if you did produce a buy signal there, just like this buy signal, I'm not interested in buying that because I haven't had a retest. I haven't had my test of the extreme. In this case, the extreme being the low. And you know what, folks? There's going to be times when the market is just kind of hopping back and forth like this. And sometimes you just got to wait it out. You just got to let it settle. The other thing, Andrew, is sometimes it's just as basic as our data providers being slightly different. Okay, here I'm just going to adjust this trade, this 4-arrow consolidation. I'm running continuum data. The other thing you can do is load your chart. Go here to reload Ninja script, and what that does, it'll reboot your chart, and that may get it to look the same as mine. All right, so we got filled on this 4-arrow consolidation off this yellow bar. So depending on where you choose to start counting your consolidation, normally when the market starts drifting sideways, or better yet, pulling back, because a 4-arrow consolidation is essentially a flag type formation, a bull flag or a bear flag. All right, so they brought us in. Let's see if we get a green bar sell to follow. Remember I said the market could retrace all the way to 48.82? Stinkers. The sellers were so strong through here. And now they've all disappeared. Come on. I still think that we are going to see a bearish move here. Just, given how quickly this has come down, there's going to be a little bit of profit taking going on here, a little bit of buying going on here. But I'm fairly confident we should at least see a retest of the low. Come on. Yes. Russell's asking, what about the red bar buy on the Eagle? Well, here's the thing, right? We're looking at a market today that's giving us a mixed bag of signals. Russell said maybe a second push on the entry. And now the second push simply means we allow the signal to engage and then retreat from the signal. A second push is always a safe way or safer way to enter a trade. The downside with a second push is if the market doesn't flinch and just keeps going higher and higher, or lower and lower, whatever the case may be. The market owes us a retest of the high. There's no question. We are getting a second push here now on this particular bar. You could look to enter above there. Is it a high probability signal? Yes, it is. I think 48.82 is a realistic number for this market. But here too, there's nicer looking setups, right? If I'm only looking to take 2 or 3 trades a day, is this really a setup that fills me with a great deal of confidence? Well, it's a red bar buy, yeah. It's a high probability signal. Is it in the context, in how we've seen the market unfold, is it a signal I want to get on board with? Well, and if I'm okay walking away from $270 if the trade doesn't work out, then yes, by all means. Let me find you. Here's a nice little red bar buy. So here we have a market that's already in an established trend. Nice little pullback to the hard edge. Red bar buy signal. And that one had better follow through to it. So in the context, this red bar buy looks a little better than this red bar buy, right? This one has already breached this low here. The market might be expanding even. Why is that significant? Well, a lot of times we'll see a market expand when it um, changes direction. All right, so my selling attempts here have been thwarted a little bit. The market very reluctant to head lower. If I can at least get a couple bars moving my direction, I can bring my stops in a little bit. I don't know if we're waiting on some more news or what the deal is, but an odd day today. Yeah, there they go. They're gonna march up there to 48.82. So we've got a market that's flip-flopping back and forth. There's no rhyme or reason to them this morning. Going to get tapped here in a moment. So we saw a huge move lower. Now we're seeing a huge move higher.
Order canceled.
All right. Going to be that way. Just an unusual morning. Well, it's been active, but not an easy trading day. Now we're just on hold again, waiting. Stephen, I hear you. Stephen says, it looks so easy now. Short at 10.11 and long trade at 10.38. Yeah, yeah, it's always easy trading in hindsight, isn't it? Honestly, I know, Russell, you pointed this out, this red bar buy signal. Honestly, I did not think it was going to have that kind of follow through. I thought we would see it get here to 48.82 and then watch the market turn again. I honestly anticipated that to be a test of the extreme and then the market to unwind and at least test the bottom end, if not recover into a full downtrend. But nope, didn't happen. Got up here closer to the highs. Now, days like this are unusual. Obviously, they do happen. They are not the norm, however. Well, now we've just kind of dried up again, haven't we? Nothing's really going on here. Oop. right now. I know everybody's looking at this saying, well, Eric, what about that macro pullback? It's the same as always, right? It's a high probability signal. Uh, we try to cover the trade so that we have the greatest chance of hanging in the trade. But honestly, this market looks like a great big sideways range to me today. I'll stay with it for a few minutes longer. I've actually got a doctor's appointment this morning, so we're going to close up on time. Come on. They're trying to give us a little uptick here. All right, well, let's put that up there for now. So, an odd morning to be sure. You know, the sellers definitely had control for a moment when they drove the market down here. Remains to be seen whether this will be a test of the extreme. I almost would venture a guess that the buyers have taken control of the market. I would not be surprised to see a hard edge bounce and a possible buy signal. That would be something I could get bullish on. I don't know, does it look like we're maybe developing a bit of a sideways declining channel? Yeah, it's hard to say at this point. Very light on the structure this morning. All right, I think we're going to button up shop on that note. I'm looking for a little bit of an uptick here, but really the structure today very, very flimsy. Maybe that's the best word for it. The market's looking equally bullish and bearish, so it's a tough call right now. Tomorrow, Wednesday, just a reminder, we're going to be at the alternate venue at the public trading room, and we'll see you guys then. All right, bye for now.